One, we have a housing shortage in this country. Two, we've got a growing population. Third, prices are down from the peak. Fourth, interest rates have likely peaked. And I believe people invest in stuff they know and then stuff they find cool.
Welcome to the Tom Storey Show with Steve Karrasch and Tom Storey, where we discuss everything real estate or whatever else is on our minds.
Here and yeah, let's do it. And I appreciate you being here, so thank you.
No, my pleasure.
Okay, awesome. All right. Welcome back, everybody, to another episode of the Tom Storey Show. I appreciate you being here. This is your Sunday weekly real estate roundup podcast for the Canadian real estate market. If you haven't already and you're watching on YouTube, make sure to subscribe to the channel. I know we are almost approaching 2,000 subscribers, and this is our 51st episode. So we stayed consistent with this. If you guys are showing up every single week, I just want to say thank you. Make sure to smash the like button on this video as well and on the audio platforms. Steve, we had one episode that just almost crossed 1,000 audio downloads. So it's super, there's just the one episode. Super cool to see what's happening there. You have something to say about that?
Oh, yeah. Like if our guest today can be as controversial as that guest, I'm sure this one will get more. So say some...
What did he or she say?
Yeah.
I love controversy.
So no pressure, Phil. And let me give you the introduction you deserve, Phil. Okay, so Phil Soper is the CEO of Bridgemark Real Estate Services, but you are best known in the real estate industry of the CEO of Royal LePage. Royal LePage is a Canadian real estate company that's been around over 100 years. It is where I hang my hat. I've been with this company for almost 9 years now, like basically my entire career.
Timer.
I'm an old timer. Yeah, I'm getting some grays kind of all around here. Also, Phil, for the 6th year in a row, based on the SP 200, has been named the #1 most influential person in Canadian real estate. And on the overall list for North America, you were number 11. And Phil, I think depending on how this podcast goes, we might either get you into the top 10 or you're just going to be off the list next year. We just...
And Tom, it sounds awful for me to correct you to the pod, but it's actually the 10th year.
Oh.
And number 10. So I'm in the top
you are?
10.
Okay.
Yeah, so there you go. New ranking, and it's the 10th time.
Okay. Well,
so, and by the way, it helps to be running a 110-year-old Canadian, business icon, regardless of the industry. There's not too many firms who can have had the impact on Canada for over a century that Royal LePage has. So it's a reflection of you and all your colleagues. So thank you.
Well, thank you, Phil, and we really thank you for being here. We've had your name on our list for a while, but we kind of wanted to build this up to a point that people were showing up before I asked you because I knew it was a big ask. So I really appreciate you being here. We're gonna get into a ton of fun topics today, but I actually wanted to start. So people know you as the CEO of Royal LePage. You've been in that position for quite a number of years now. How did you get here? Like, was the goal always to be the CEO of a real estate company? Because I'm guessing maybe no, and you ended up here somehow. How did that happen?
It's actually my third industry. I'm an engineer, a computer engineer by training. That's what I did my undergrad out in Alberta at the University of Alberta. I grew up in Calgary. Started working in the oil industry and didn't stay there very long. Moved to IBM, which was my goal, and worked for IBM for a number of years. They moved me all over the world, but you say IBM stood for I've been moved. And interestingly, Royal LePage Relocations, back in the day when people would move their family and wives would say, yes, company, I'm giving up my friends and moving the family to different places. I worked in Paris, in England, south of London, in Silicon Valley in New York. So lots of moving. But right around the end of the 90s, going through the crazy .com 90s, I had 2 little kids, and they wanted to move back to New York again. I just didn't want to move. And just at that time, an old friend from undergrad gave me a call and said, Brookfield's looking for someone to knit together these 3 relocation companies. They have a big bid for government moving government employees around. And so it's it's a sort of moving cultures, moving systems, technology, integrating it. And it was in Toronto. And so I didn't have to move. So I made the leap, and, never underestimate the power of luck in career planning. The IT industry imploded. The dot-com bubble burst. My successor, I was running the company's consulting and professional services business. And my successor had to lay off hundreds and hundreds of people. And of course, real estate's had a pretty good run for the last 23 years. So the timing was right. And from the big boss, my predecessor, a great man by the name of Simon Dean, was looking to retire. No one knew that. I'd only been in the company 18 months and I got the nod to take the big job. So my first job in real estate specifically was running a big real estate company. So I like to say, started from the top. And I knew nothing. You bought and sold houses. You think you're a pro, you know nothing. But a quarter of a century later, I know a little bit. So
you were with Brookfield. You were with Brookfield for 18 months before you took the Royal LePage CEO job. Yes. I don't think a lot of people know this. Can you break this down? So Royal LePage is owned by Brookfield, like we're maybe a line on their tax receipt. I don't think people understand how big of a company that is, right?
Brookfield is, Forbes has for a number of years now ranked Brookfield the number one real estate company in the world, but it's into much more than real estate. It's actually older than Royal LePage. It dates back to the late 1800s. A group of business people from Montreal and Toronto started up a business to import timber, special kinds of timber from Brazil. And the company's original name was Brascan, Brazil, Canada, a combination of the two names. So like Can-Am, it was Brascan. And it developed into a big, successful real estate company. Generally, that was the focus. But the company really changed right around the time I came in. The person who was running our new homes division, the home builder, Brookfield Properties, we used to call it. It's now Brookfield Residential. A fellow by the name of Bruce Flatt, who's my boss, took over the company and renamed it Brookfield. He thought Brascan had some negative connotations, totally changed the firm. And it has been a runaway success for a quarter of a century. $800 billion of assets under management. If you put that in perspective, that's 2.5 times Berkshire Hathaway.
Wow.
It is little factoids. If you're in Paris and you go up the Eiffel Tower, Brookfield actually owns the Eiffel Tower. Well, not exactly. But we own the top and underneath the ground because in France, power transmission is separate from, say, telcos and power firms. They rent space on tower networks, and Brookfield bought the biggest tower network, which included the Eiffel Tower infrastructure. Largest operator of hydroelectric, private operator of hydroelectric dams in the world, big operator in the Middle East, in Australia, in India, huge operator in the UK, growing in Europe, and of course, a dominant firm in North America. After 9/11, after the crisis in New York, Brookfield, which is the largest landlord on Wall Street, was the very first company to reopen after the crisis, after the Twin Towers came down. And Bruce Flatt was there standing in a cleaned up One Financial Place, Brookfield-owned building, and said, we're going to be back for our clients. So it's an amazing company. They are actually the majority or the largest shareholder in Bridgemark, but they don't actually own the whole thing, but they're our strategic partner and have been for years and years.
That's so interesting to me because as someone that just sells real estate for a living, and I know I work for Royal LePage, and I think that's the company I work for, but there's so many other moving parts, and we're really just part of this absolute massive machine.
Now I will say, Tom, the way Brookfield operates is it gives its CEOs incredible autonomy.
Yeah.
So, it's not like someone is asking me to sit in on discussions on the egregious compensation plans our top agents happen to have.
No idea what you're talking about, Phil.
They leave that to me to give away the farm, the house, all everything else.
What has changed in the last 2 decades for you being the CEO? I'm assuming when you took over Royal LePage, the agent count has obviously exploded since you got in there. Not to talk you up too much, but I will. Like, you're Phil Soper. Everyone knows who you are. You're a legend, especially in Royal LePage. I know for a fact there are real estate agents that specifically stay with this company because of you. And
I hope not. Hope not just that. But you know what? Over the last 20, 25 years, 2 decades, when I first came in, remember, I'd spent 15 years at that time, the world's leading technology company. So I took a lot of things for granted. I remember going to an NAR, the big American expo, National Association of Realtors, and I'm meeting with the manager of our largest brokerage in Calgary, and we're sitting there, and I'm saying hi to people, meeting people, and this woman came up, and she was a little bit older, but not that old, and I shook her hand, introduced myself. She walked away, and he shook her head, and he goes, "Oh, she's the end of an era." She goes, she can't understand email. And we go in, every few weeks and look at her emails for her because she finds it very confusing. And we found one recently where the kids of longtime clients have been writing saying, "Hi, we want to list our house, and Mom says you're great. Following up, third note, I guess you've retired. Good luck in retirement," right? That was email. Yeah. I remember fighting with the Toronto Real Estate Board in the mid-2000s to increase the number of photographs that we had on a listing. Plain old photographs, from something like 3 to we wanted 10. So what am I getting at? Technology keeps marching along and changing every aspect of our life. We had no social networks. We had no YouTube. We had no Spotify, no Apple podcast platform to broadcast useful information like you guys have for consumers. None of that existed. Right. But companies like ours have just ridden that wave. When you think about it, we've got with Royal LePage and our specialty boutiques, we've got 22,000 people from coast to coast. Obviously, you can't, keep on top of what they need to know, what you and your team needs to know through analog methods, passing out paper or even sending out weekly emails. Everything has to happen in real time. So, if I look at our operating platform now, as you know, Tom, it's called RLP Sphere. Other American real estate companies have put in place this kind of infrastructure. It's completely digital, completely cloud-based, at key overwhelming points in the flow of how our industry works. When you have to get back to a client with information that's readily at your fingertip, but you've got 6 clients to get back to, the system, the autopilot, the AI-driven nature of the system will do that for our clients. That was the stuff of science fiction 5 years ago, let alone 25. So, yeah, I'd say that's the biggest change. But we could go on, and I know it would bore some of your listeners who are users of the services, your clients, and maybe be interesting to some people who are relatively new in the industry. But the changes go much deeper into the way we service clients, the regulations that exist to protect clients that never existed before. The industry continues to climb in importance. It trades places back and forth with oil and gas, the energy sector, for the largest industry in Canada, the most important driver of economic activity in Canada. It is critically important, not just for putting roofs over the heads of the 40 million Canadians, but also for driving the prosperity we have. So it really has changed, and it's grown tremendously over the last 25 years as Canada as a nation has grown.
So we talk about putting roofs over, everyone in Canada, and I guess I'll just ask the question: are you surprised so far in 2023 how fast things seem to have come back, recovered?
Yeah, we were, we're pretty good forecasters just because we, as you know, as one of our key spokespeople, we spend a lot of time at it.
Yeah.
We've got a professional economist. We've got data scientists who look at the trends and the massive amount of data that we generate from our own company and ancillary companies. But it's still looking ahead as a crystal ball exercise. And we were positive about 2023 and the recovery. And I can tell you why, and if you're curious, but we were positive, but our outlook, which seemed rosy to some of the big banks were quite negative in their year-end 22 outlooks. And we had the price declines, which were still in full swing in December 31st, 22. We had them reversing by the end of the first quarter and gradually climbing on a national basis to plus 1%.
Okay.
That's price I'm talking about. Toronto, I think we had at the GTA plus 4. Vancouver was a little bit less than that. Well, we revise our forecast every quarter. It's the biggest change upward we've ever done.
Wow.
We moved to 7.5% up in the GTA, for example. And I know based on the May results today across the country that if it's going anywhere, that forecast, it's going up, not down. The economy is solid. People are working. The population is expanding. There's other weird demographic things going, which I know those of you who service city cores understand, like smaller and smaller household sizes that are driving the need for new homes. And we're just not keeping up. So at its most fundamental, it's a supply and demand issue. There's too many people looking to put a roof over their head, be it rent or buy, and not enough places for them to shop.
This episode of the Tom Storey Show is brought to you by Masters Academy. Masters Academy is the #1 real estate conference you can go to as an active real estate agent in the country of Canada. I really do mean that. Steve and myself will be there in person, and for the first time since 2019, it's happening in person in Vancouver. I am super excited to fly out and see everybody in person. It is run by Richard Robbins and his entire team. He's been my #1 mentor in the real estate industry. And Steve, we've talked about this a lot, but in terms of sure, people can teach you how to sell more things in whatever you do for a living, but if you don't actually enjoy your life, what the hell is the point? So I know I'm going to be there. Steve, you're going to be there. What are you most excited for from this upcoming event?
I go to this event twice a year, once in Toronto and then once in Vancouver when they have it. Like you said, it's back now, but what I look forward to the most is seeing my friends who are most top producing agents, and many of them have been here on this show. So seeing them, bouncing ideas off of them, that's my favorite part. However, if you are a struggling newcomer to the business, let's call it, or if you've been in the business and just need a reset, this is the place for you. These top producing people that have been here on this podcast, let me tell you, they have learned a lot of what they do every single day at this event. And this year, it's back in Vancouver at the Hyatt Regency, July 5 and 6.
And if you're a listener of the Tom Storey Show, we have something pretty cool to tell you. If you want to buy a ticket to this year's event, you can go into the link in the description and you can get $200 off your ticket. When you click on that link, make sure you click the Tom Show logo and it will send you to a page to get a discount on your ticket. Joe Polish will be speaking at this event. So if you're obsessed with marketing like Steve and I am, that's something you should go for. That's worth the price of admission alone. And you're going to hear from Richard. You're going to hear lightning rounds, genius interviews. I remember the first one of these conferences I ever went to. I sat in the back row and I was so intimidated. And then 3 years later, I was standing on the stage telling people what was going on and what was working for me. So it's so crazy what it can do to transform your career. Don't be silly. Buy a ticket. Come say hi to me and Steve. I'll have a sour beer. See, Steve will probably have a whiskey or something for you, and we'll have a great time. Link in the description. $200 off if you go to the link in the description. We hope to see you there. July 5th and 6th in Vancouver, Masters Academy hosted by Richard Robbins. And now back to the show. I find because there's so many smart people involved in the real estate space now that we've also found a way to absolutely overcomplicate this as much as we possibly can and use fancy words and confuse people, where it really is just wherever you agree or disagree with who is the demand and who and where is the supply actually coming from and all that kind of stuff. It really does kind of at the end of the day come down to that. But there are, I'd say, the counterpoint that we're hearing, right, from some consumers or bank economists is, the first one would be people on the variable rates that hit the trigger rate, the amortizations are being extended, right? So it's kind of like people are saying, well, that's the one thing propping up the market. Or someone that's 2 years into a fixed rate and is going to have to come up in a few more years, and maybe their rate will double if rates don't come down. What are your thoughts on those two kind of counterpoints on, yeah, sure, it's good right now, but just wait because there's going to be something that happens here?
Sure. Well, I'll use the Lower Mainland as an example, sort of to step back a second. People have often said to me, a professional journalist, well, young people just can't afford homes. So, the housing industry it's going to be in big trouble. And I kind of laugh because I look at Greater Vancouver, Lower Mainland, and it wasn't that long ago. The numbers are getting closer together. It wasn't that long ago you could buy one Montreal or three Montreal homes, two in Toronto, and for one in Vancouver. In other words, Vancouver is double the price of Toronto and 3 times the price of Montreal. Yet the home ownership rate in the Lower Mainland in Greater Vancouver, while it's lower than the national average, national numbers around 68%, 64%. 2/3 of people in the region, our second largest population in the country, were able to find their way into home ownership. And it's not like when I was a kid, I lived in Vancouver, I lived in Kitsilano. It was incredibly expensive. We thought things were crazy in the 90s, the kind of prices we were paying in a neighborhood like Kitsilano. And it's crazy today. Right? So it's not like it hasn't always been super expensive, like New York City, like San Francisco, like Berlin, Mumbai. Right. There's incredibly expensive places around the world where people find housing. So when people need to find housing, they find a way. For example, in a report we released this morning on investing in real estate, some really surprising data out of that. I'm not sure if you had a chance.
I've got that as a question coming up for you because I wrote.
We'll deal with that later.
Yeah,
but the number of people who live in a property that's also a rental property, in other words, that's both an investment property and a principal residence, is the highest in the Lower Mainland. Surprise, surprise. No one's surprised by that when you step back and look logically. The most expensive place takes more creativity, like, for example, renting out a suite in the property. And while it's been slow to come, policymakers in Vancouver and in the surrounding region, Fraser Valley, Tri-Cities, are responding with more creative development ideas to allow that sort of thing to happen, to increase density, to allow people access to housing. So, we get annoyed at politicians who are slow to respond to really obvious social woes, but it's not like they're deaf. It's just moving the machinery of government takes courage and time, and you just don't move as quickly as a business or a practice, a professional services practice like you guys. You can turn on a dime. You may say, oh, my real estate company's slow to react. Well, it takes a little bit longer. Well, it takes a long time for government.
Yeah. And so Steve's located in Fraser Valley.
And yeah,
Steve, are you seeing any encouraging signs for supply in your market? Like, is there anything that's happening? I know we talked about the upzoning and things like that. That's something that, and also NDP is currently in charge there, so that changes things as well. What are you seeing right now?
Lots of moves that are not going to do much, I think, in the short term, for sure. Like upzoning, who's really going to tear down their house and build 4 units on it tomorrow? Probably not that many people. However, the industry itself, the market itself, right now, we are seeing finally some increase, about 10% or so, in active listings on our board right now. So what I'm hoping is by summer, maybe that continues to increase. The only trouble is, I think last year it was up to like 53 or 5,600 listings. We're still only at like 44. So it's still ridiculously low. Now that's for sale. That's not, we don't do leasing the same way you guys do on your boards or by your agents. So I don't see that much of it, but it's interesting that you're talking there about, it's kind of the first time I almost thought of this right now, just listening to Phil talk, was the basement suite thing. That's the number one question we get now when we list a detached home. Does it have a rental unit? That's like before, how many bedrooms does it have? Does it have a rental unit? So not every single, I would say 60+% of the houses that are on the market are looking for that or looking to add one. And then those guys now have like a 1-bedroom is $1,600 now. So you almost have to immediately tack that onto the price, right? Like when you're in the prairies, you're not adding value as a result of having that extra income. That's one part that gets lost, right? Somebody's got $15,000, $16,000, $20,000 extra per year to put into their housing in the Lower Mainland because they're renting out 1,000 square feet or 700 square feet of their 4,000 square foot house.
And hopefully now that's coming to Toronto, right, Phil? Because we've now voted 18-7 on the legalizing the 2, 3, and 4 unit multiplexes. And I guess the question is, how long will it take? Because it's still up to the owner to do it, right? It's not like the city's like, it's going to cost you money. You got to get permits and you're going to decide if you want to do it. But that's something that realistically actually could help. Do you think that is the biggest news we've had in a long time for Toronto housing inventory?
Yeah, but there's the crisis that you can see right in front of you, the spring or summer of 2023, but we don't elect governments really to solve those problems.
Yeah.
That's up to business and the creativity of individuals, call it individual families. What we hire them to do is to fix the problem 3, 5, 25 years from now. It's a little bit like climate change, right? We're not going to solve the climate change problem in 2023, but if we don't get started and focused on 2035 or 2030 or 2050, your kids will have a real challenge. My grandkids will have a real challenge. So we elect people for those kind of, and to a certain degree, it's someone like me. It's part of my job I've sat on a couple of federal task forces on, for example, housing and the environment. Flooding, fire, but mostly flooding is a big issue in disclosure. And so, it may be something that our frontline practitioners are unhappy to hear, that we're driving the need for more environmental disclosure in properties, because it can make the listing that you want to take more challenging to market, to sell. If, for example, it's below the medium, it's got a bigger carbon footprint or a bigger risk from, say, flooding. But if we don't do it today, we could lose entire neighborhoods. And so, the company's got to take a longer term look and do the right thing. And our elected policymakers and our professionals at the municipal, provincial, and federal level, the people who don't change when the politicians change, they've got to take that long term view and drive us in the right direction. The good news in Canada, by the way, is that we are doing very well on multiple fronts. We probably do have the worst housing supply crisis among the leading, call it the OECD, the top 20 economies in the world, but we also have the fastest growing population. So household formation here is growing more rapidly, much more rapidly than European countries. So while they have affordability issues, ours are worse, but they have other issues, shrinking populations, less people paying into the social safety net that keeps hospitals open. So we're in a good place, and success is a challenge. And you guys would know that. The busier you get, the harder your practice is.
Yep.
And, crazy year like 2021, when you probably had to disappoint a number of your clients because you just couldn't satisfy their needs with the crazy fervor that was driving the real estate market during the pandemic. It also had the good side, right? I'm sure you're both adrenaline junkies. So having all those balls in the air and helping a number of people find a home, even if there were some that were disappointed, now you're helping them in a cooler, calmer environment. So sometimes I think the answer is we can't solve the problem today, right, but let's start working on a solution for 24, 25, 26. And that's housing supply.
Yep. Now, for the general consumer, I've always believed in everything in life that perception is what is real to that person. What their perception is of something is how they make decisions, how they think of things, how they have conversations. Now, the perception with the media, there was a hilarious headline yesterday in BlogTO, which I used to actually get decent info from, and it said no one is buying Toronto condos. The market has completely. I got 22 offers on a condo last night, so I'm like, what the? Come on, guys! Like, I get they're playing the game. I know what they're doing, but the reason I'm asking you this, Phil, is because I've obviously done a lot of media. I've only had that opportunity because you guys believed in me, which I will forever be grateful for. But you are at the forefront. You're talking to Bloomberg. You're talking to CTV. You're talking to everyone. And the narrative that is going out of the real estate market, typically they don't want to run a story that's like, young family buys house, they're happy, first kid's on the way. No one clicks on it, right? But sales volume down 46%. RBC says the blah, 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 whatever it's going to be. So, and I think you've done a phenomenal job at showing up on those interviews and giving the other side of the argument without seeming like a biased real estate person saying real estate things are always going to be good. I just like your opinion on, the consumer gathering information, where it's coming from, the sources they should be going to or not be going to, because there's just so much noise out there.
Yeah. Well, if we turn our hats around and we look at this from the standpoint of a professional journalist and their editor, and that's one thing, you would know, Tom, but many of your clients wouldn't know. Newspaper editors, online publication editors, they're the ones that write the headlines, not the journalists. So the journalist writes the story, and then the headline is applied, and its purpose is to drive eyeballs, to get people to watch. So the first little bit of truth in journalism is negative headlines drive eyeballs. Remember having lunch with the editor of the Financial Post one time, and he told me it was four times as many, readers for a gloom and doom or a disaster coming than everything's good, everything's fine story. So I get that. That's first thing when we turn our hats around. The other thing is they are bombarded by businesses who would love to, tell their story through the media. And it's not just real estate. It could be automotive. It could be food. It could be anything. So they have to be very skeptical, just in general, about messaging that comes from business people. It's why you see so many university profs and economists and things on TV, on screen, because they're viewed as less promotional. So the approach we take at Royal LePage is, focus on the facts, tell the story, whether it's good news or bad news. We were front and center on predicting 2022 was going to be a tough year, and you gotta say it as it is. And sometimes our own people, our frontline realtors, are a little annoyed when I'll say something like, there's irrational exuberance in this particular market. People are paying too much for homes because there's a frenzy, and this will end, just like it did in the pandemic. And people are going, I can't believe you say that, but it's because it's the truth. So I think all you can do is try to greet journalists straight on, give them your honest interpretation, and here's key: look back at your forecasts, and we do that. When we do forecasts, our public relations and research department keeps track of how we do. Because if you don't have a feedback loop in anything you do, how are you going to improve? If someone doesn't watch your golf swing and tell you your right elbow's flowing or flying out, how are you ever going to figure it out? So media is an interesting one. It is frustrating at times, but I rarely, lose my mind over a story. Every once in a while, but I don't get caught anymore. Touch wood, with saying something that I'm going to really regret. I just done it long enough, and so true, Tom. But when I first started doing real estate media, I did media in the IT industry, very different.
Yeah.
In the real estate industry, particularly in housing, a little less on the commercial side, but in housing, it's everybody's news. 70% of Canadians own their home. Another 20% would like to. It's everybody's news. So everybody's going to be listening to what you say. So be careful, be truthful, and you'll be treated fairly most of the time.
I'm glad that you view it that way, because I just want to let you know the headline for this podcast that's coming out was like, the title was written by the editor and not us. Okay. Just so you know, because it's probably going to be something that will be very clickbaity.
I won't blame you guys. A couple of honest journalists.
This episode of the Tom Storey Show is brought to you by the Storey team at Royal LePage Signature in Toronto, Ontario. Although he's here on the recording with me right now, and I don't like saying nice things about him to his face, Tom and his team, well, they are probably your best pick if you are looking to buy or sell residential real estate in downtown Toronto. Let's face it, probably the city of Toronto itself. Tom, make a strange face if that's wrong.
That is correct.
That is correct. All right. We are good to go. So if you are looking for one of, if not the top agent in downtown Toronto for your residential real estate needs, condos, semis, detached, if you're looking to upsize or downsize, give Tom and his team a call. And Tom, how would they get in touch with you?
I think the best thing would be go to the first link in the description of this episode, and you can book a call with me at a time that works for you. And we'll go over all the information you need and see if we can be of service.
And I recommend, if you are listening to this from across the country and you're either moving to Toronto, or if you're an agent outside of Toronto and you have a client moving to Toronto, go ahead and book a call with Tom, because he would love to take your referral as well. That is the Storey team at Royal LePage Signature in Toronto, Ontario. He's a pretty good guy. He knows what he's doing. Just don't tell him I said so. Tom, the last part we need to do before the end.
This communication is not intended to breach...
Cause?
Any breach.
What's that?
That was...
Oh, you want me to say it?
I don't know what the word is. I don't even know what the words are.
This communication is not intended to cause or induce breach of any existing agency agreement.
And now, back to the show. Yeah, Phil, I don't know if I ever told you this. I've had a good experience with the media 99.9% of the time.
Yeah.
And same thing, knock on wood, I've never really been caught saying something I fully regretted. I've really kind of thought about my answers. No, it wasn't even, I don't even regret what I said. It was just how it then came out. It was a full interview, a 5-minute live interview. And this was in July of last year, as rates were going up and prices were significantly coming down. And they said at the very end, the last question was, do you have any advice for potential sellers?
Okay.
I said, well, based on my understanding that I believe Bank of Canada will continue to increase the rates, I don't see waiting being a better alternative if you need to sell your property today. I think doing it now makes more sense because prices are looking like they're going down here. That was then clipped on a Facebook post through this massive media corporation. Realtor says sell now. And honestly, the comments were hilarious, like mostly ripping into me, were hilarious. Like, yeah, funeral owner says maybe a good time to die. But it was just so funny because people get a piece of the story. They get a piece of it. And even though I believe what I said was great information at the time, because if you look back and you needed to sell, it would have made more sense doing it than waiting till the end of the year. But just kind of funny how it comes out there and how they're going to use it, right? So,
yeah, and it sometimes explaining your logic doesn't get around what people hear. A journalist or someone at a cocktail party. So, for example, in 2022, if you're a homeowner, remember 7 out of 10 families are homeowners. There really wasn't a bad time to sell in 2022. And buy, because you got to put a roof over your head. Why? Because if your property is worth less, forget about interest rates just for a second. If your property is worth less, so is the one you're going to buy. And most people trade up. And in percentage terms, you take 10% off 2 properties, you get a little bit of a lift from, because you're upgrading. And we knew interest rates were going to rise, so the cost of borrowing was going to go up. The other side of that was there was less to buy from, right? Because there was so few properties on the market, and prices were falling. So if you waited, you could have bought something cheaper, but what you were selling would be worth less too. So if you believe in the long term, this is why I always focus on the long term. When people ask me, I say, don't try to time the market like you're some whiz kid picking stock tops and bottoms. And we know that smart long-term investors, the Warren Buffetts of the world, say the same thing. Don't try to time the market unless you do that for a living. And even then, it's a tough way to make a living. If you get in to housing, the long-term economic prospects of Canada are positive. Growing population, our economy is solid, and we have the natural endowments that allow our country to flourish. When you add smart people on top of it, so sort of the tide will rise, and a rising tide raises all ships. So in the medium to long term, being in ownership is where you want to be. And most people, when we survey people, we survey young buyers. I think the last survey, we do it every year, 91% said they believed in housing. It'll never get to that level, 91% owning, but 7 out of 10 will probably continue to own their property because it's been good for their parents, their grandparents, their great-grandparents, and it's going to be good for their kids.
To steal a quote from one of our recent guests, Jordan, he recently posted on Twitter and he's like, people in Canadian real estate have a goldfish time horizon. Like all the people who have opinions, it's like, are you buying for 5 minutes or are you buying for 5 years?
Man.
And
that's a good line.
I thought that was just a great way to put it. I want to get into this Royal LePage investor report because there's a few key things that were very interesting to me. But just before I do that, because I know Steve has this question burning for you, I know Steve wants to know, Royal LePage has been around 100 years. Steve works for Macdonald Realty. I don't know how long they've been around for, but in terms of they're not too
76?
76?
Somewhere in there.
So not too dissimilar in terms of what they are. They're Canadian real estate companies, local specialized, all that kind of stuff. Now, there is a trend, and there was a recent report, I'm not sure if you saw, that showed agents leaving. This was an American report. I think Keller Williams had the most amount of agents leave, and the cloud-based models, whether that be Real, EXP, I'm sure there's others that will come, gained the most amount of people over to their direction. Sorry, I'm taking Steve's question. Steve, what's the actual question that you had? It was just like, where do you see this going here? As a
I want to know more about like the future and direction of what we would call kind of legacy brokerages. Just because there is this cloud brokerage model that's, personally, I'm not convinced it's long-term yet. It might be long-term in the future. But obviously you have to be aware that that's your competitors now and probably taking a chunk of your business, how big or how small, who knows. What does the future, because here's why I'm asking this. I am not yet convinced that that business model or those brokerages is good for the industry. I think it's great for, because of their downline funnels and all that stuff. I think that's great for maybe the individual, but I don't think it's good for necessarily the consumer, or I haven't yet been convinced that it is. And I think real estate companies that are, like I say, legacy, they've got something on their hands here that they haven't had to deal with in the past, which is a completely new value proposition to their customers, which is the real estate agents.
Yeah. You know what? Obviously the big growth for the virtual brokerage model without field support staff, field management, or offices, it really got a shot in the arm during the pandemic when offices were closed and support was virtual. So it's not, if you look at a contemporary successful real estate company, there are a lot of people that work virtually, right? People work a long way away from their office. I know in your brokerage, Tom, you have people servicing Peterborough and other places. So if you have the technology in place at the firm to provide support, and with clients signing documents digitally, the ability to pass contracts or information from one system to another system seamlessly and without having a human involved, the virtual part is easy. The growth behind those businesses, which by the way has slowed considerably, if you look at the stock price along with a number of the what we call prop tech or property technology darlings, Zillow, Open Door, such, a lot of them are down, 60, 70, 80%. This is their stock price from where they were. Some of the private companies that have public debt are announcing large-scale layoffs and this sort of thing. So just like the burst in the dot-com bubble in 1999, 2000, the tech bubble, which created the impression in venture capital circles that you didn't need to make a buck. There didn't need to be any profit. You just needed high levels of revenue. You could lose a lot of money. That again has proven to be just complete falsehood, right? I mean, Zillow had to shut down their FSBO, their direct-to-consumer business. Yeah. I think in its last year, it lost $750 million. It was massive losses. So the real reason for the growth of some of these companies, it's not really their virtual. Virtual just gives the company, not the realtor, but the company cost advantages, is that they're building on age-old multi-level marketing systems, right? Pyramid schemes. And so they They ask people who get in early to help bring other people in, and they take part of the income from those people and part of the income from those people's people. And so it's, I call it a greed model. It's not focused on consumers. It's not focused on making consumers happy. It's focused on making a buck off your brother. You know, there'll be some people who get rich if they get out at the right time, because a lot of it is paper wealth. Depending on the firm, it could be tied to the value of stock. So if the stock falls by half or 70%, you know, there goes some of that wealth. There have been these models in market for a long time. You look at an unsuccessful one like Exit, you know, it just never really achieved any material success. And a successful one like Keller Williams, not so much in Canada, but in the United States, a very big successful company, they pivoted. They started as a multi-level marketing company, and they just don't talk about it that much anymore. They pivoted to technological support, business services, culture, just the kind of things you'd hear at Royal LePage or Macdonald. So anyway, we run the I guess the largest Canadian virtual brokerage. It's called Brokerage. It's in Quebec, about the size of Macdonald. Nice, a profitable company, but it maxes out in terms of, like, it's been around for 20 years. And no offices, no field staff, everything's delivered through technology. There's only so many, if you take the pie of all the realtors in Quebec, there's only so many of them that are interested in that kind of model. Great business. We love it. Love the people working there. They work collaboratively with Royal LePage on some tech initiatives and things, and then they compete in the marketplace. But it's not taken over the industry by any stretch.
Well, as Richard Robbins has taught us, is that price is only an issue in the absence of value.
What a great line.
I think that is super interesting.
He's a smart man.
Yeah, pretty smart guy. We don't like to give him too much credit here, but we'll say he's a smart guy. I want to get into this investor report, Phil. So Royal LePage came out with this morning. Now, we're recording this at the end of May, but this episode will come out early June, just in terms of timelines for when we're talking about this. A few key points that I read here. 26% of all Canadians say they're likely to buy an investment property in the next 5 years. So,
isn't that insane?
But here's how the news is going to spin it. 75% of people are never buying investment properties. But
so I wouldn't do media for just on that number, because that's the number that blew me away. 11% of Canadians are investors.
Yes.
4.4 million people. It's a lot of people investing in real estate. And ask me about young people and investment in real estate in a second. We'll get back to it.
Yeah.
But back to that 26% number. That is crazy. I mean, 26% of people, landlords, investors, it will never get to that number. It's like I mentioned earlier in the show, our research shows 91% of young Canadians, 20s and 30s, believe in real estate, believe they'll be a homeowner. We won't get to 91% home ownership. We know that, we bump up at around that 68, 69, 70% of people own homes, and you kind of push the limits of where you can drive home ownership. In Canada, it's not the highest in the world, but it's one of the highest levels of home ownership, a few points higher than the United States. So we know on a global scale where the limits are there too. Same with this. The thought that 1 in 4 Canadians would be a landlord is kind of crazy, right? And remember, only 3 in 10 Canadians rent. So the numbers have to kind of work, and they'd be up against specialists, people like you, Tom, that do it for a living. So it's not going to happen, but it shows you emotionally, in terms of the fashion of investing right now, just how attractive real property is as an asset class. It's just The pendulum has swung,
Yeah.
and it's way over here. Everybody thinks they're going to get rich in real estate, and they need to talk to a professional advisor to talk them off their euphoria tree. And there's hard work, time involved. It's not a get rich quick.
Whatever the opposite of that is what real estate investing is. Yeah.
Exactly.
Yeah. And the other one that stood out to me was that 51% of people that are already investors, they want to buy another property, another investment property in the next 5 years. So that's showing me that it looks like, despite interest rates and potential uncertainty in the market and extended amortizations and low inventory, and we can go through the list of here, there is still that appetite. Now, if I'm someone that's trying to get into the market but can't afford it yet, I'm reading that being like furious, being like, oh, the people that already have the real estate are buying up more of it. But still an interesting stat. 1/3 of Canadian real estate investors, 32%, own 2 or more properties. Yep. Interesting. And then here's one. Younger investors, those aged 18 to 34. Sorry, Steve, you didn't quite make the cut, but I'm in there. Are more likely to own more than 2 investment properties compared to their older counterparts. And do you think, Phil, this is a generational thing where we're looking at our parents and going like, okay, I can see the proof is here. I want to own this long term. And maybe for this generation, because of all the social platforms, in terms of all the, there's lots of crap on the internet, but there's also lots of good financial advice and financial advice on YouTube or some of the largest channels on the platform. People are like really into this stuff. Do you think it's just a generational social thing that we're learning about it, so we're more interested in buying more assets?
Well, we've got some theories. This is new research. This will stay relevant for a long time because it's sort of benchmark, headline making insight into a really important supply channel for rental properties in the country. It's not big faceless corporations that supply that home that your kid's going to rent when they go away to school, get their first job, or if they decide they want to be a lifelong renter. It's probably an entrepreneur, a small business person who owns that property. But let's focus on the youth. I've got theories. One of the fascinating stats was 15% of real estate investors in the country don't own their principal residence. And my future son-in-law, one of the ones you haven't met, Tom, he and his brother are in this category. Got out of school, I guess, kind of 3 years ago. His brother got out of school less than 2 years ago. They got a little inheritance from grandma, not a huge. They have savings. What do? They buy an investment property in St. Catharines. One of them lives in Calgary. One of them lives in Toronto. They're both working. And again, neither one owns their principal residence. They're both renters. Mm-hmm. And here they are. The first purchase of real estate is an investment property in a town they don't live in. So my theory. Firstly, the media, because of people like you two and companies like us, understands a few fundamentals. One, we have a housing shortage in this country, a crisis of not enough homes for our people. Two, we've got a growing population and we've reached record levels of immigration, 500,000 new Canadians, and it's unlikely to change anytime soon. Why? Because people are retiring from the workforce at a much greater rate than they're entering the workforce. There aren't as many young people paying taxes as older people not paying taxes. Right. So we need these new Canadians to keep paying the bills. But they need a roof over their head. Third, prices are down from the peak. Good news. Fourth, interest rates have likely peaked and are likely going to be coming down. And one of the more subjective ones, I believe people, especially early in their investment and savings lives, invest in stuff they know and then stuff they find cool. So I believe that young people, to the extent they've made investments in stocks, may have over-indexed towards tech stocks, and they've got hammered.
Yeah.
In the reset, we talked about Zillow and Home Open Door and companies like this, but also the pure tech companies. So they're saying, your point, Tom, my parents have done very well in real estate. All these factors are going to continue to drive prices up. Yes, borrowing costs are higher, but so are rents. So revenue will be higher. And I'm just not cool with what the stock market did to me. I put $5,000 away and it's worth $4,000. How can that happen? It's supposed to go up. Well, you know what? You can't blame them. If you look at the last 75 years, house prices have gone up on average a little over 5%. Why? Because we put a pin on the map and people cluster around the pin. That's the way urbanization works. People cluster together, whether in small towns or big towns. It creates scarcity in real property, and prices will rise faster than inflation. It's just one of the realities of economics. And if they read that, they understand, because they've talked to someone like you, that leverage works in their favor. If they have 20% down on a property and it goes up, they get the advantage of 100% of the equity increase. So they get all that, and they're smart, they're educated because of things like your podcast. So that's my theory.
We have had several people that fall into this category. And I tell you, actually, just another thing, that we have clients that rented a place during the pandemic, during pandemic rent, when rents very much fell, and they rented in buildings that were under rent control. So they're paying right now, some of them are paying $1,000 under market rent. And they're coming to us. They're like, we're not moving from here unless they physically, pull us out of here. But I want to get into the market, and they're now. What I will say as a caveat to this: if you do this, you are not a first-time home buyer. You have to move into that property within 9 months in Ontario. You don't get the first, so make sure that's very clear for everybody. But yeah, we've had this happen several times. We're buying properties for people as investments, as their first purchase, that they're staying where they are, and then leasing them out, which is
Tom, we're doing the exact same thing. I have multiple clients right now that are either staying at home with mom and dad, and they're like, well, I mean, she's still cooking with cheese, man. I'm not leaving, right? Like, let's keep going there. And then even other people that just have like cheap room rents or whatever, they're making it work, and they're like, I'm not leaving where I am, but I'm for sure going to start having somebody else pay down future equity for me. So let's get going.
Yep. It's that overall, there's lots of fascinating insight into the Canadian investment market. For example, 43% of the properties that investors own in the country are single detached. Only 33% are condos. So if you think that condos are the only class, investment class, you probably live in Toronto or Vancouver, and not Surrey or Red Deer. So there's lots of interesting insight here. So I recommend your listeners run their fingers over to royallepage.ca in the media room, reports and research, royallepage.ca media room, and have a read of the actual data. And it's all written in language that makes sense to consumers and our realtors. So it's good stuff. And I find it a really good resource. I know a lot of Canadian realtors use it, even if they're not Royal LePagers. So, and it's kind of our gift to the industry.
Well, I'll tell you, I want to thank you guys for all you do, because you give me content ideas every single month. Phil, this morning I recorded a YouTube video going over the investment report. Like, I've already, that's my next thing coming out. Okay, I'm going to leave you with one final question here.
Sure.
And this isn't a show we bring people on and give them softballs, right? These are hard hitting questions.
Oh, it's been brutal.
Okay, so there was a recent report from CTV that there was not our brand, but a brand in which an agent was making bogus offers to pull up the prices of houses. And you look at the overall perception of real estate agents, and these are the stories that hurt us. You know, we know that a good chunk of the industry are good, honest people that do what their clients want them to do and create great results and great careers. But there's going to be those bad, and this is alleged, by the way, so this isn't, I can't say anything other than that. But where I want to go with this is this has now, what the story said is that this is the obvious reason why we need to go to open offers. We need to make everything open. I just want your thoughts to end this off here. Does open offers, because personally, I don't think it's going to solve pricing. I just think it will help transparency, which maybe if that's what people want, let's give it to them. Like, what's your opinion on that?
Yeah. Open bidding, as it's called, is touted as a fix-all for lots of challenges that exist in the housing marketplace, and it's not all those things. That said, any kind of transparency is good for consumers. I don't think open bidding, using a company or an industry, Korea's experimenting with a platform that could help in this way, the Canadian Real Estate Association, using a platform that ensures that it's fair, would hurt home sellers. I honestly don't. Because for every time that a bid comes in that is, say, materially above the previous bid, because someone really wants that property, there will be the times where people get caught up in the excitement of an auction and keep bidding longer than they would have if they just threw their one bid in on the deadline. And they balance each other out. And we've done the research. In parts of the world, Australia, they don't do all their property sales through auction. That's a misnomer. If you've heard that, it's just false. But they do much more than we do through a bidding style process. And the price inflation they've experienced, because we trade places with Australia as the fastest growing population center in the world, among the developed world. And it has been identical to ours. So it doesn't help. The challenge, and the reason I believe that Ontario, the government took the right approach. They amended the act in Ontario, and because it used to be in the interest of privacy, you as a practitioner, Tom, were not allowed by the license that you practice with to disclose information like the bids of other people. Yeah. And now you can. So the open is allowed. What we need is for it to become more common, and more people do it. The challenge is, and the Premier of Ontario actually spoke to this fairly eloquently, said, people work hard to own a home, to get their home. Where am I to come in and slap a bunch of regulations and tell them how they should sell that home?
Well, that's refreshing.
Want to sell it themselves, they should sell it themselves. They want to sell it via auction, put it out on auction. If they want to sell it in a fashion where they take offers and put a deadline in place, that's up to the homeowner, advised by a professional who helps them get, maximize their value from that home that they put all that sweat equity into. So I don't think the answer to this, like the answer to so many things, is the government trying to fix a problem with regs. We've seen this in BC where it backfires. The most recent one, and I'm sure that there's not much love for this within Macdonald. I know there isn't within Royal LePage, is this idea that someone could complete a deal, signed, sealed, delivered, handshake, consideration paid, and then 3 days later change their mind and unhook the deal.
Phil, it wouldn't be a Tom Storey show without Steve complaining about the cooling off period. It just wouldn't be a...
Because what we're seeing now, Steve, and it's not happening very often, but we've seen it happen on the North Shore, very expensive real estate up there and incredibly short supply, just like the Fraser Valley. We're seeing rich people use it as a kind of layaway plan. So they're in market on a busy weekend, a property comes up and they say, God, I might like this one. They might be an investor, or they may be rich people that are looking for the perfect home, but I want to shop around a little more. Well, let's tie it up. And what are they going to lose? Relative to the price of the home, the administration fee they pay for unhooking the deal is minuscule. And then that homeowner loses a spring market weekend. They lose Friday, Saturday, Sunday at the peak of a market. And the spring only lasts a few weeks. And then they come and they say, no, we found something we like better. And they unhook that deal. That's not how the legislation was intended. And this is what happens. It happened with some of the they called it the Alberta tax, where people were being the BC government slapped tax on second properties. And so people who owned a cabin in the interior in certain markets, suddenly the taxes went up so high they had to leave. And so what does the owner of that what does the local real estate market, other homeowners do when the value of properties falls because, Albertans can't own property there? I was at a Royal LePage event in this, by the way, it's cooled way off. Yeah. This would have been 4 years ago when this legislation was first slapped on in Edmonton. And the MC got up and said, and we're not serving BC wine. And everybody's cheering. It was like two provinces at a war over each other. It was like the legislation was aimed at Alberta by the BC government. So anyway, heavy-handed regs rarely.
Yeah, I totally agree. And let me just get my comment. Maybe this will be my final thought, Tom, because I know we got to get going. The whole thing that happened in wherever it was, Montreal or Quebec or whatever it was with those two agents, I was kind of just, I don't know if it was not knowing the market or if it was just trying to use, I hate the word narrative. I absolutely hate it. But they took a fraudulent offer and then made it seem as if fraudulent offers couldn't happen if we went to open bidding.
Right.
And those are two different things, right? I know people get really mad at me when I use really bad analogies, but I told Tom this one earlier. That's like, hey, I know someone in Afghanistan attacked us, but we're going after Iraq, right? Like it's just using something in order to get something else done, right? So anyway, that's my final thought, Tom.
We're a big industry, 155,000 people. My wife's a lawyer, big industry. Don't know how many lawyers we have in the country, probably similar number. A lot of people would probably say we need fewer lawyers and fewer realtors, but that's free market. It's a bell curve. Most people are honest, hardworking people. There's some superstars and there's some crooks. In our company, we fire crooks. Like we put them on the bench pending, if it seems pretty obvious they're guilty, even though they haven't been found guilty in court yet, they're not working with us anymore. They're suspended. Mm-hmm. And we've pushed the regulators hard. The regulators, by the way, we had one case, and by the way, this is like 15 years ago, where one of our realtors sexually assaulted an assistant. So it's a male team lead, and an assistant was assaulted. Second degree, not rape, but assaulted, and horrible for that young woman. We fired them immediately, and we went to the regulator and worked hard to get that person's license pulled. The regulator would not pull their license. Why? Yeah. Because they didn't do it to a member of the public. Our box is we only worry about people in the public. Well, you tell that to that young person's or her family. Totally. Anyway, it was. I find we need the Ontario Real Estate Association. I know best because I'm friends with Tim Hudak. He has been pushing since he took the reins to crank up the fines, the penalties, the loss of license for people who are bad in our industry, who do bad things. Tiny little proportion, but we need to show them that there's no place in this industry for them. And it's not just a cost of doing business. So it's a minuscule fine that they get slapped with. And the regulator needs to step up, and regulators across the country need to too, and work with leadership in the industry to punish people who hurt consumers by breaking the rules.
Yeah. Phil, it seems like you're being called away from us, and we appreciate
you heard my watch.
And we appreciate you being here so much. Honestly, like we could have booked 3 hours. We could have kept going. This is awesome. I hope you'll agree to come back one day.
Absolutely. It's great fun chatting with you guys. Great questions. Love what you're doing for Canadian consumers and the industry overall. I know you have a lot of your colleagues across the industry, across the country that tune in. So good luck with your podcast. Mash that like button. Hit subscribe.
Hey, there you go. You don't even have to do it, Tom. This is perfect.
Well, just to end it off, Phil, I just want to say, as part of Royal LePage, I think we are very, very lucky to have you, and you being the voice out there talking to the media, to the consumers, and even other agents and other companies are lucky to have you as a face in the Canadian real estate industry. We appreciate all that you do. We appreciate being here on this show. Thank you, everyone, for listening to this week's episode. We will see you next Sunday. And if you haven't already, make sure, like Phil said, smash that like button and subscribe to the channel and leave us a review on Apple Podcasts. Have an amazing week, and we'll see you soon. Bye.
This was awesome, man. I really like it. Can't wait till next week.
One sec, Phil.